making it one of the most influential economic indicators for the US economy. I show you this price because it's highly possible that the pullback can end near this point of the DXY, marking its worst weekly decline since the FTX collapse. Welcome to this market analysis session. I'm Islamic Martinez, a trader and analyst at xChief, bringing you an in-depth review of the financial markets. Today, we will analyze key assets including the US dollar index, the SP 500, Euro USD, and Bitcoin. With recent economic events and shifting market dynamics, understanding both technical and fundamental factors is crucial for making informed trading decisions. Stay tuned as we break down the latest market movements, trends, and potential trade opportunities. As always, we will start with the economic calendar, and don't forget that all the hours you are going to see are based on GMT-5, the New York session. On Monday, March 3rd at 9 a.m., the ISM manufacturing PMI will be released. This report measures the health of the manufacturing sector in the US. A reading above 50 indicates expansion, while below 50 signals contraction. Investors and traders watch this closely as it gives insight into economic growth. On Wednesday, March 5th at 7:15 a.m., we have the ADP non-farm employment change. This report provides an early estimate of private sector job growth before the official government jobs report. At 9 a.m., the ISM Services PMI will be published, tracking the performance of the services sector, which makes up a large part of the US economy. A reading above 50 signals growth, while below 50 indicates contraction. On Thursday, March 6th at 7:15 a.m., the European Central Bank will announce its main refinancing rate. This is the key interest rate in the Eurozone, and any change can significantly impact the euro and global markets. Shortly after, the ECB will release its monetary policy statement, explaining its economic outlook and potential future policy changes. At 7:30 a.m., the US will release unemployment claims, showing the number of people filing for unemployment benefits for the first time. A lower number usually signals a strong labor market, while a rise may indicate the economic weakness. At 7:45 a.m., the ECB will hold a press conference where policymakers will discuss their views on the economy and monetary policy. On Friday, March 7th at 7:30 a.m., several key US labor market reports will be released. Average hourly earnings measures wage growth, which is crucial for inflation and consumer spending. The non-farm employment change, also known as the NFP reports, shows how many jobs were added or lost, making it one of the most influential economic indicators for the US economy. The unemployment rate will also be released, showing the percentage of unemployed people in the labor force. A lower rate is positive for the economy, while a higher rate may indicate an economic slowdown. Later in the day, Federal Reserve Chair Jerome Powell is scheduled to speak. His comments can influence market expectations on interest rates and economic policy. This week will be highly significant for the markets, with major employment and inflation data driving volatility. Traders will be closely watching these events to adjust their positions based on economic trends and central bank policies. Now let's continue with the most important fundamentals of the week, and we will start with gold. Gold prices have surged over 40% since January 2024, and Goldman Sachs predicts the rally will continue, pushing prices above $3,000 per ounce. Their latest forecast projects an 80% increase in 2025, with gold reaching an all-time high of $3,100 per ounce, up from their previous estimate of $2,890. The primary driver behind this upward revision is stronger than expected central bank demand. Since the freezing of Russian central bank assets in 2022, institutions have significantly increased their gold reserves, with purchases in December reaching 108 tons compared to an average of 17 tons before the sanctions. Goldman Sachs also anticipates rising gold ETF purchases as declining interest rates make the metal more attractive. However, speculators reducing their net long positions in future markets could exert some downward pressure. Despite this, ongoing concerns over tariffs, geopolitical risks, and soaring government debt levels may drive more investors toward gold as a safe haven, potentially pushing prices as high as $3,300 by the end of 2025. The report highlights central bank purchases as the dominant factors supporting higher prices. If monthly central bank demand averages 70 tons, gold could climb to $3,200 by year end. Additionally, if fears over US government debt intensify, central banks could further increase gold purchases, adding another 5% to the price and bringing it to $3,250. Goldman Sachs expects the Federal Reserve to implement 2 rate cuts in 2025, which would further support gold as lower interest rates reduce the opportunity cost of holding non-yielding assets. However, if the Fed cuts rates less than anticipated, gold could fall short of expectations, reaching only $3,060 by year end. Shifting our focus from gold to the crypto market, Bitcoin has dropped to $78,000, marking its worst weekly decline since the FTX collapse in 2022, with a 16% loss in just 7 days. The broader crypto market has lost nearly $500 billion amid a global sell-off in tech stocks, inflation concerns, and Trump's tariff policies. Investor sentiment is deteriorating as expectations of a pro-crypto stance under Trump fade. Bitcoin ETFs saw $2.27 billion in outflows this week. An analyst warned that Bitcoin's struggle to break above $97,000 since November signals a possible market correction. Security fears also weigh on the market after Bybit suffered a $1.5 billion hack, the largest crypto heist ever. Meanwhile, crypto-related stocks, including Coinbase and MicroStrategy, are also declining. With growing economy and geopolitical uncertainties, Bitcoin remains under pressure. Now we will continue with the technical analysis, and as always we will start with the DXY, the US dollar index. If you saw the technical analysis of the last week, we have been watching closely a downward trend. This downward trend with lower lows and lower highs was effectively giving good trades if you were bearish with the market. However, after this week, we have seen a new upward movement that maybe will be the first step to make a market structure shift. If the DXY can break the 107.381 resistance, it's highly possible for this asset to try to make a new upward movement, but try to be cautious with the next movement, because after these breakouts it is common to see a pullback from the last movement. That means that the US dollar index can have a pullback to the zone that is between 107.115 and 106.683. And as always, I will put you the 50% of this zone that is located at 106.899, and I show you this price because it's highly possible that the pullback can end near this point of the DXY. After this, I will try to search for bullish trades with the DXY, but before that happens, I need a pullback. That means that if I want to draw an arrow here, it would be in this direction. However, if you are bullish with the DXY, the next important point that I can consider is located at 107.750, and the last one could be located here at 108.419. Let's continue with the SP 500. The last week we had a good opportunity to try to buy the SP 500, and we have seen that after this big movement that we have, this big pullback, the price has been rejected at this point, which is located at $5,837. This point of the price of the SP 500 is crucial because defended is highly possible for the SP 500 to try to make a new upward movement and try to search a new all-time high. On the other hand, if the price keeps falling, don't forget please that after this point, we will try to search liquidity with the SP 500 at 5,773. And if you are bearish with the S&P 500, you can also consider another point located at 5,696. Let's continue with the Euro USD, maybe one of the most difficult assets that we are seeing today, and that's because we don't have a clear structure. As you can see, the Euro USD is trying to defend an upward structure. We are seeing this, but after all, the price tried to make a new market structure shift. And that means that the price will do this. Then maybe after this movement that we are seeing right now, maybe the price will try to recover. And after this, the price will start to fall. With this, maybe we are going again into the range. So a consolidation for the Euro USD will be a possibility for this week. And if you are trying to trade with the Euro USD, I will leave you with these targets. The most important targets for the bullish movement can be located here at this fair value gap. Clear fair value gap located at 1.04534, and the other one is located here at 1.05170. Finally, objectives that you can consider for the bearish movements can be here at 1.03332, another one located here at 1.03031, and last, and maybe one of the most important targets for the bearish traders this week, will be trying to break the 1.02308. So the next movement before trying to make a new sell with the Euro USD will be trying to catch the recover, and then after this recover of the price, I will try to sell the Euro USD. Try to short. Now let's finish with Bitcoin. We had one of the worst weeks with Bitcoin, and that's because we fell from the $96,000 to $78,000, more of $17,000 of a downward movement. After this, the price is starting to recover, but it will be difficult because the first resistance, important resistance for Bitcoin, is located here at $87,000, and before we see that, it will be very difficult to try to catch a new trade. If we confirm this market structure shift from this clear downward trend, at least here in this time frame, if we reach this point of the price and we break it, the thing that you need to try to search will be a correction, a pullback, and after this pullback, try to search for an entry with your strategy and try to follow a new upward movement. For now, all we can say is that we need to be patient with Bitcoin and also with all the cryptocurrencies. That concludes our analysis for today. The markets are constantly evolving, and staying ahead requires continuous learning and strategic insights. If you found this analysis valuable, make sure to like this video, subscribe to the channel, and enable notifications so you never miss an update. For a seamless trading experience with cutting-edge tools and expert insights, register now at xChief.com. See you in the next session.